Welcome back to our channel Traders. Today we will discuss how to use derivative in crypto trading. First, derivatives are financial contract whose value is derived from an underlying asset like cryptocurrencies. 2. Common types include futures, options, and swaps. Each serves different trading strategies. 3. Use derivative for hedging or speculating on price movement in the crypto market. Finally, be aware of the risks, including high volatility and potential losses. Mastering derivatives can exchange your trading strategy. Using derivative in crypto trading allow for greater flexibility and potential profit. Start by understanding different types of derivative such as futures and options. Futures contracts look in prices for futures dates, while options give you the right to buy or sell at a specific price. Always assess your risk tolerance before trading derivative, as they can amplify both gain and losses. So, derivatives can be powerful tools in traders' arsenal when used wisely. They provide opportunities for hedging and speculations, but also come with increased risks. It's crucial to have a solid strategy and to continually educate yourself on market dynamics. By mastering derivatives, you can exchange your trading approach and better navigate the volatile crypto markets. Thanks for watching. Goodbye.